Hi everyone, this is Richard, CEO and founder of Altfins. In this video, I will cover a quick fundamental analysis of one inch token using some on-chain data and some news. So 1inch, it is one of the first DEX aggregators to have launched about 2 or 3 years ago. If you're not familiar with 1inch, a DEX aggregator, what it is basically a service, a decentralized platform that finds the traders the best price across multiple DEXs, Uniswap, Paraswap, SushiSwap, and others. 1inch aggregator was amazing when it launched because it checked the price on many of these decentralized exchanges and found the best price and best execution for that trader's order. Now, it is still one of the leading aggregators, as can be seen on DUNE analytics. Here you can see that competing with such as Cow and Paraswap and 0x MetaMask, 1inch has a 70% market share still. And in fact, that market share has grown since a year ago when it was at 54%. So it is still a leading aggregator. And today I came across some interesting news when I look at 1inch in the news section of our platform. And by the way, if you're looking to find out more about 1inch and its history, it's under the description section here. You can read about the token, which primarily is a governance token thus far, but this is very relevant to today's discussion. But what I came across was some headlines, in fact, yesterday afternoon, talking about a new proposal, governance proposal that could change the tokenomics. And in summary, if we open up the first link in this news here, in summary, this proposal basically looks to create new staking incentives and give token holders also a revenue share. It also changes the structure for governance voting on future proposals. And as you can see, so far this proposal is overwhelmingly being approved. And it's likely to be actually approved. The voting ends on December 4th. So there's a few more days for the stakers to cast their vote, but it's most likely to go through. So again, on the surface, this proposal appears very positive. A lot of times these kinds of proposals that change the tokenomics and create additional incentives for the holders to stake their coin and earn or perhaps sharing the revenues can be very positive because they can drive demand for the token and therefore drive the price up as well. However, when I did a bit more digging, I found two issues that could offset this positive news. One is that 1inch doesn't really generate much in revenues. So in fact, here on our platform, if you go under the on-chain data, you can see that there's a total revenue tab here that basically tracks what revenues is this project and protocol generating. And these numbers are very low. In fact, we can go also under the revenue tab here in the table and see that in the last 7 days, it only generated $2,000 in revenues. In the last 30 days, $6,000, and annualized, we're talking about $75,000 in revenues over 1 year projected. Of course, that could change up and down. There's a fair amount of volatility. As you can see, there's a lot of revenue here in big spike in revenues in November when the FTX collapsed and a lot of the trading shifted to DEXs. But overall, even if we're talking about $100,000 in annual revenue, that's not a lot of revenues to really care and matter to the token holders and stakers. So, so on the surface, this proposal appears really interesting in that it proposes to share 50% of the revenues with the stakers. However, there isn't that much revenue to share, really. Secondly, the bigger problem is that the token supply is growing too fast, putting pressure on the price. In fact, just recently on December 1st, and there's another source here for that data, on December 1st, a big chunk of supply was unlocked. That was this step up here. This is the total supply that's been released for trading to the public, or basically unlocked. And on December 1st, it increased by around 230 million tokens were unlocked on December 1st. That's about 15% of total supply. There's going to be more to unlock over the next couple of years, all the way to end of 2024 or so. And so, these unlocks, especially the most recent one, mostly went to the hands of investors, early investors, VCs, and the team itself. And so since the project does not generate substantial revenues or meaningful revenues, the team itself has to rely on token sales, essentially, to fund its operations. And so the growing supply is an issue, and therefore, in summary, although the changes proposed in the governance proposal and the staking incentives could drive demand for 1-inch tokens, there is an offsetting increase in supply of tokens from the recent token unlock and the future token unlocks as well. And also, as I mentioned, the project does not generate enough revenues to matter for the token stakers. So, the price is up today about 5%. Maybe part of the news, there could be some sort of news-driven rally in the price. I would not rule that out. Overall, on the technical, from the technical standpoint, as you can see, it's been a steady downtrend across short-term, medium, and a long-term basis. So from a technical standpoint, it doesn't look that rosy. But in fact, as you can see here on December 1st, when the big unlock happened, the price was at about 50 cents. Now it's down at 40 cents, so about down 20%. So the price could have sort of a news-related rally here in the near term as the proposal gets approved on the 24th of December. But overall, I think that the supply of token will continue to crush any demand that this proposal may generate. I hope this helps your analysis. If you have any questions, please email us at invest@altfins.com. Good luck trading and investing.